Headlines do more to terrify than to clarify, and that's exactly why we want to share a few facts with you today. Facts about the local Denver real estate market and how it's being affected by the broader economy. Because let's face it, with all the talk of tariffs and the economy and everything else flying around, you deserve a trusted source for real information. That's what we're here for. So let's get into it. First up, the Metro Denver market snapshot for single family homes based on the most recent stats from March 2025. We ended March with just under 6,000 active listings. You'll see the MOM or MON stat, that's month over month. So compared to February 2025, we have 7.2% more active listings on the market. Now, year over year means just that. YOY, year over year, we're up a huge 41.5% compared to March 2024. That's nearly 2,500 more listings than just a year ago. New listings, we had 4,263 new homes hit the market in March. That's up 34.1% just from last month and flat compared to March of 24. Closed listings, that's homes actually sold. 2,687 closings in March, which is up 31.1% compared to last month. Again, nearly flat compared to March of 24. Now, let's talk pricing. Median list price for March, 689,000. That's list price. Median sold price, 650,000 for the whole Denver metro. That means homes are selling very close to list price. Another signal of price moderation and a move toward a more balanced market. Time on market from when a home is listed to when it goes under contract is now averaging 45 days. That's about 15% fewer days than last month, but 18.4% longer than March of 24. We're also sitting at about 2.4 months of inventory. See, that means if no new homes came on the market today, we'd sell everything currently available in just over 2 months. So how do we frame this in the bigger picture? What's the outlook? What can you expect as we head into the busy home buying and selling season? Let's look at a few key facts to help ease fears and put some clarity back into the conversation. So first, 83%, almost, of U.S. homeowners have a mortgage rate under 6%. Why does that matter? Because it shows that most homeowners will do everything they can to protect their largest financial asset, their home. Let's be real, it's almost impossible to rent right now for what many homeowners are paying on those low mortgage rates. Second, homeowners are sitting on a ton of equity. 39% own their home free and clear. Another 29% have 50% or more equity. What does that tell us? There's just no mathematical path to a housing crash, at least not according to any expert worth listening to. Third, the economy. Yes, there's lots of talk about tariffs, the global economy, and of course the big one, recession. Let's define it. A recession means 2 months, or two consecutive quarters rather, of negative GDP. Since the 1980s, we had 6 recessions. And what do people remember? They remember 2008. And they assume that's what happens in every recession. That's just not true. In fact, 2008 is the only time in recorded history where housing saw that kind of crash. During 4 other recessions, home prices actually went up. In 1991, they dipped a little. So let's recap the big picture here. 83% have low mortgage rates, nearly 70% have 50% or more equity, and 2008 was a one-time anomaly, not a pattern. If a recession hits in the next 6 to 12 months, remember this: housing inventory has never been lower heading into one. Here's another fact. Mortgage rates typically fall during recessions. Check it out. Okay, last point. Let's talk about the inventory increase. Yes, inventory is rising. I mentioned it at the beginning of the video. We do have more homes on the market now than this time last year. But if we go back to the pre-pandemic times of 2017, 18, and 19, we're still well below those inventory levels. Again, check the slide. The good news, based on projections from the experts, we're expecting about a 10 to 15% increase in inventory over the course of 2025. If that happens, we'll return to those pre-pandemic levels by the end of the year, and that's a good thing. More inventory means price moderation, which we're already seeing, and a return to a healthier, more balanced market. So, if you've got questions about your neighborhood, your zip code, or your home's current equity, let's talk. You'll find our contact information on the screen and in the description below. We're Tim and Sandy Jones, Jones Team Colorado with eXp Realty, your trusted local real estate advisors. If this video was helpful, please like, subscribe, and share with someone you know who's thinking about real estate in the Denver area. Thanks for watching, and we'll see you in the next update.